Commons Standing Committee on Government Operations and Estimates, known everywhere as the mighty OGGO. The only committee, of course, that matters. Special hello and Happy New Year to everyone. We're starting the year off strong with our friends from the Parliamentary Budget Office. Welcome back, Mr. Jakes and crew. I understand you have an opening statement. Before we get to that, at the very end, we just have to approve our budget. We'll do that at the end, and then I'll go over in the next couple of weeks' schedule and subcommittee date that'll take us to our Family Day break. But Mr. Jakes, we'll turn the floor over to you. Go ahead, please.
Monsieur le Président et distingué.
Mr. Chair and distinguished members of the committee, thank you for inviting me to appear before this committee. I have the pleasure to present our most recent analysis for Parliament and to provide you with a brief administrative update. I am joined by colleagues who contributed to this work. Since my last appearance before this committee, the PBO has continued its mandate to support Parliament by providing independent, non-partisan analysis of the government's spending plans and fiscal outlook. We have published 8 reports directly related to Budget 2025 and matters under consideration by Parliament. This includes an initial assessment of the government's planned spending reductions under the Comprehensive Expenditure Review and the Budget 2025's $1 trillion investment commitment.
Je vais répondre à vos questions sur ces rapports.
I will answer your questions on these reports, but first of all, I would like to provide an administrative update and a follow-up to our Budget 2025 issues report. And I will now continue in English.
In the coming weeks, the OECD will publish its first external review of Canada's Parliamentary Budget Office. I commissioned this review last September. The review assessed our institutional framework, operational practices, and alignment with the OECD principles for independent fiscal institutions. While the external review is yet to be published, I am encouraged by recent public comments from the head of the OECD's Public Management and Budgeting Division, who succinctly concluded that, quote, "I think Canada is very lucky to have the PBO and to have a body that has respect from seemingly all stakeholders that we talk to," end quote. In the interest of transparency and accountability, I would also like to draw your attention to our new policy on report revisions that was published last week. This policy formalizes our approach when reports are revised and how those revisions are communicated to parliamentarians and stakeholders. Next week, we will also publish our very first communication strategy and policy, which will explicitly codify our parliamentarians' first approach. I also wanted to follow up on previous testimony regarding our Budget 2025 issues report. Members will recall that we highlighted concerns regarding the government's decision to abandon its debt-to-GDP fiscal anchor and its overly broad definition of capital as part of the new operating budget fiscal anchor. Last week, the International Monetary Fund published its Article 4 consultation report on Canada. The IMF also concluded that, quote, "A clear debt-to-GDP anchor should remain central to the fiscal framework, extending Canada's strong tradition of fiscal prudence," end quote. In addition, it noted that the government's new definition of capital remains, quote, "broad," end quote, and would benefit from closer alignment with existing standards used by Statistics Canada and other countries. We encourage parliamentarians to follow the progress made by the government in implementing the International Monetary Fund's recommendations. I will now continue in French. En conclusion, je tiens à dire...
In closing, I want to say that my office remains committed to providing Parliament with clear, timely, and nonpartisan analysis to support your scrutiny of federal spending and fiscal policy. We appreciate the constructive engagement of this committee in advancing transparency and accountability in the federal budget process. My colleagues I are pleased to answer your questions now.
Thank you, Mr. Jakes. I appreciate that, and I look forward.
Merci, Monsieur Jakes.
I participated in interviews for it, so I'll look forward to see it, and perhaps when it does come out, we can invite you back with your team to discuss it. Before we start, I want to offer a warm welcome to Mr. Osborne, who's joining us for a while. He has sat previously with us, I think, for one meeting, but now we'll see him back more often. So welcome back, I guess, to OGGO, and look forward to seeing you on public accounts as well. I hope you're still there. We'll turn things over to Mr. Chambers to start for 6 minutes, please.
Thank you, Mr. Chair. Mr. Jakes, welcome back along with your team. It's always a pleasure to have you here. Also interested in you teased the OECD report, but hopefully, or I look forward to reading their findings, and it sounds like they're in support of the institution, and I think I can speak on behalf of myself as a parliamentarian. The work that you do supports us very well, and I thank your office for that. I also note, I think the CBO in the U.S. has a much larger budget, and anyway, I'll just leave that there. On the recent work, your report on the investments, can I just ask a very basic question on the definition of capital and spending, which I think supports your research here? The government provided a table in the budget on page 283 that showed a comparison of what other countries do when they call something a capital investment. The government offered actually no comparing country that treated corporate income tax credits as an investment in capital. Do you have a view on that? I don't believe they've offered any other country that does that, and I'm not sure that is in kind of alignment with other countries that split capital and operating.
Sure. Thank you for the question. I would go back to the comments that we provided to the committee previously, that we highlighted in our Budget 2025 Issues Note, that it is a very broad definition. We are unaware of any advanced jurisdictions that would define capital in that way, including corporate income tax tax credits that are being provided. There are other measures as well, including operating subsidies provided to companies that are potentially related to capital investments that the Government of Canada also includes, that is not really seen in other jurisdictions. In reading through the report and the commentary from the International Monetary Fund, it's evident that the International Monetary Fund also shares those concerns, which is why the International Monetary Fund, similar to ourselves, we highlighted in October and in November, International Monetary Fund, several months later, but highlighting the same issue, that potentially be worthwhile to learn from other jurisdictions and use a consistent definition that other people use.
Thank you. That's very helpful. I was surprised that the government didn't offer any other combination, especially when they provided a table to the public that showed other countries that were aligned with them, but on this one they had no comparison. On the report about the $1 trillion in total investment, my understanding that is not a net new number of investment. Is that correct?
That is correct, yes. So basically, what we try to do in this report is understand where the $1 trillion figure is coming from. And starting from the federal government commitment to support the industries and investors to the tune of $280 billion, we found actually that of those $280 billion, we actually, one finding, I guess, it's 285 billion. So the 280 is a rounding. So you will see me mentioning the 285, but it's really a rounding. So of those 285, 41 billion approximately are associated with new measures from budget 2025. And the remaining amount is related to measures that were in place prior to the publication of the budget.
So when the government says it's, you know, the budget is generating $1 trillion or will generate $1 trillion in new investment, what I'm hearing from you is a lot of those investments were already being made. Is that a fair?
It is a fair assessment,
characterization?
yes.
I also note an interesting parallel between the way the government has communicated the $1 trillion, along with they have a whole chapter in the budget on the super deduction that they say will have a monumental impact on investments in this country, encouraging investments. But if you look at the table that they provide about the cost of the super deduction, almost all of the super deduction is already in place today. The only new measure in the budget, I think, is about maybe $300 million in what I'll call stimulus a year. So there seems to be a consistent messaging from the government to say, oh, we're delivering this big number, but actually the net benefit of what they're delivering isn't as big as the headline. Is that a fair, you don't have to comment on whether you agree with it or not, but they come out with a big headline, but when you dig down, it's actually, most of it's measures that were already happening anyway.
Well, that's what we found after our analysis, is that almost 71%, pretty much, of the 1 trillion is related to investments or stimulus, whether it's government investment or business investment, that was already in place prior to the budget.
Final question, what is the number then that would be net new? Is that a fair question, or should we follow up on that after?
It is a fair question. So there are two numbers, I think, that are important to keep in mind. So the first one is what is net new investment from budget 2025 from the federal government. So that would be 41.3. And how much more investment, total investment, that is expected to be generated by that additional investment. So that amount we estimated to be 126 billion.
Thanks very much. We're past our time. Mr. Gasparo, please go ahead.
Thank you, and Happy New Year, everyone. Great to see you again, and I'm glad you led off the conversation with the International Monetary Fund's 2025 Article 4 report. I just want to quote something from the report. I'm going to paraphrase the first part, and then I'll give a direct quote. The IMF's 2025 Article 4 report on Canada paints a picture of an economy, and I quote, weathering external trade shocks better than expected thanks to policy responses and strong fundamentals. Would you agree with that analysis?
I take the International Monetary Fund's analysis, of course, very seriously. They're very good economists, much better than myself. So yeah.
But we don't want to diminish your.
I take it very seriously. I would say, and something we were discussing prior to committee, that the International Monetary Fund also throughout the 60-page report does highlight the downside risk to the Canadian economy and the significant levels of uncertainty. In addition to that, while the International Monetary Fund in their charts highlights that certainly at the federal level, Canada's net debt to GDP ratio is the lowest in the G7, they also highlight that Canada's household debt level is the highest in the G7. And Canadian households are actually also paying the highest share of interest payments on that debt across the G7. And Canadian corporations, of course, are having the second highest level of debt across the G7. So I think it's important when drawing from a report to always look at the overall context. It's a big report, and it definitely is a nuanced story.
I agree that we need to look at it in its totality, but the fundamental headwinds that the IMF outlines are external in nature. in particular trade-related, that we don't have full control over. So I think what you're hearing from the government is we are focusing on the areas that can be controlled on the domestic front. So on that point, your report that is presented, would you say it represents one of the largest projected federal investment support efforts examined by your office in recent budgets?
With respect to the capital investments and
Correct.
related to the $1 trillion?
Yes, correct.
I don't know that necessarily would be the case, given that 85% of the total $1 trillion figure and the total capital investments were actually announced prior to budget 2025. I would have to go back and analyze it in detail, but simply, at face value, when 15% of the total $1 trillion figure is based upon the document that was tabled in Parliament on November 4th, and 85% relates to everything prior to that, I don't know that that's the case, but if there's a motion from the committee, it's certainly something that we can look at.
I would love for you to just take a look at it, please. When looking at the $285 billion, and I noticed that there was a slight discrepancy between what the government's saying in terms of the $1 trillion or the $896 billion. But that multiplier effect is still significant. Would you agree that the capital investments being made and the focus on major projects, for example, and we can touch on that in a moment, and those infrastructure investments are critical for future growth of our country?
Yes.
So the investment projects totaling almost $115 billion have been referred to in the Major Projects Office. How do you foresee the new Major Projects Office impacting new investment moving forward?
Well, it's something that we're following carefully. Obviously, the modeling that everyone undertakes with respect to the economy and investment is based upon historical data or evidence from other jurisdictions. What the government has put in place are structural changes with respect to how projects are approved. That's very difficult to model because the structure itself is changing. So it's something that we're following with keen interest to see if we do see an inflection point in terms of the overall level of investment starting to tick up in comparison to what we would have otherwise predicted based upon what we've seen in the past. I would say the government itself, in terms of the $1 trillion figure or their capital investments, they've also taken a bit of a parsimonious approach, and they highlight in the budget that that figure does not include the potential upside should there be a fundamental change in the level of investment that's occurring across the economy as a result of structural changes.
How much time do I have, Jerry? All right, well, I yield my time. I won't have.
Okay. Before we move to Ms. Gaudreau, you had asked a question about some of the numbers, and Mr. Jakes said he could get back to us in a report. Can we agree that we'll just, if Mr. Jakes is offering, we can have him do that? And that will satisfy you? I appreciate it. Perfect. Wonderful. We'll go to Madame Gaudreau, please, for 6 minutes.
Monsieur le Président, on commence déjà avec un
Mr. Chair, we're already starting with a consensus in 2026, and I hope that will continue. Thank you again for being here today. And Mr. Chair, I have a number of questions to ask to the PBO. So first of all, the question that we're all wondering, and I'm happy to hear that we're going to get the communication strategy, the OECD report, but for now, I'm trying to demystify this $1 trillion figure. People on the ground are wondering, where does that come from? Does it come from provinces, municipalities, the private sector? Were you able to break that down? Are you able to break that down so that we can know what sector that's coming from, so that we can have some forecastability, or is it just kind of unclear? I think it's important to understand the methodology that led to that $1 trillion figure. And just simply put, we
de ces fonds,
So it depends on the distribution of the funds and the
ratios de
cost-sharing ratios as well were used to multiply those basic amounts in the industries. And so that's what allowed us to came to the $1 trillion figure. So it doesn't necessarily mean that these are guaranteed investments. It is based on historical program data, what was done in the past, and programs that the government implemented.
de quelle ampleur les investissements ont augmenté.
And so we took a look at how much those investments had increased. But it doesn't necessarily mean that these investments will take place necessarily, or that these investments would not have occurred in any case.
Qu'on a une bonne idée.
It also doesn't mean that we have a good idea of really what is really additional. So when we do our forecasts, we estimate a certain amount of growth. So in terms of the federal government and other levels of government, and also the private sector, we have an idea of what their planned investments are for the future. And what's important for us right now is to determine how we can reflect those total investments in our figures and in our forecasts. So, and it's a difficult exercise, but what we can say is this: even considering the net, the $126 billion, that's a maximum portion of the total investment. Well, listen, I'm not encouraged by that at all. And I know that's a personal judgment. You may not, that make you uncomfortable, but
Impulsion, là,
there is,
fort avec 1000
there's lots of talk about this strong Canada and $1 trillion in investment. But how can we reassure people that this will lead to positive results? Because it's not clear in your report. So help me to understand. I find it's not clear. It's not reassuring. And these are very nice slogans, but it's too good to be true. I think I would insist on what Mr. Jacques was saying earlier. So yes, there's these figures that are being announced, but we're basing it on the status quo. So we're assuming that so it'll depend on the effectiveness of the investments, the degree to which there's uptake,
Canadienne soit fondamentalement.
and then there's a possibility that the structure of the Canadian economy will change fundamentally,
Beaucoup plus important.
and this will affect the GDP
Donc le PIB nominal.
and productivity. And so it really depends on the structure of the economy and our gains in productivity in the future.
On essaie d'être positif.
Okay, so we're trying to be positive. We're trying to look at things in a positive view, but I'm not reassured by this in the current geopolitical status or state that we're in. So we're asking people to trust this, but we'll see where that leads. All right, if we look at the accumulative impact of federal spending, you're saying that that hasn't been evaluated.
On pourra avoir.
Now, in that report that we hope to get, will we be getting more detailed analyses? Is that what we were talking about earlier? Yes. I didn't put my timer on, Mr. Chair. I'm 35 seconds.
Juste une question, oui ou non.
Maybe just a question, a yes or no question. Does your analysis take into account tax policy by the provinces? No, it doesn't.
Response?
No.
You'll get back
No.
to us? Okay. We will go back now to Mr. Chambers for a 5-minute round.
Thanks very much, Mr. Chair. Maybe if we can just pick up where I left off last time. So maybe a better question to ask, if I was more precise before. If the budget 2025 never occurred, in your analysis, what level of investment was going to happen?
So based on our September outlook, combining both business and government investment, we were sitting at 700 billion of total investment in 2025, and we expected that number to grow to approximately 900 billion by the end of 2030.
Okay, so if the government has put out a very ambitious or attention-grabbing number, like we're going to deliver, our investments will deliver 1 trillion. In your conversations with the government in order to pressure test this assumption, did you come across a way that the government is measuring this result?
Not presently, no.
Okay. So the government told the Canadian public that its investments, and it's what it's calling investments, but it's spending, would generate a certain amount of economic activity. But from your understanding, not to say that it doesn't exist, but you'd have not come across a measurement capability that the government is checking up on the claim. Is that fair?
I would say, from our perspective, it's something, again, that we pay very close attention to. And the private sector banks and forecasters also pay very close attention to, because of the importance in capital investment and capital formation across the economy and the links to productivity and growth within the economy. So if, in fact, there is an inflection point, if we are at a change in how the economy is structured, and what we've seen in the past in terms of capital investment is not what we're going to see in the future, everyone needs to pay very close attention to it, because it will certainly affect our economic forecasts.
Right. But I guess the question is more like, if the government would make a claim like this, don't you think they should have a system by which they would be able to tell whether it's working?
That would be a question that we better put to the government.
Right. But I think as parliamentarians, right, as parliamentarians, I think it's a reasonable question to ask. You know, when a government says, you know, we will deliver Y, you know, X is going to deliver Y, we should probably have a way to measure that, I would think, is a reasonable question to ask. Is that?
It is a reasonable question. On our end, we do have one of the world's premier national statistical agencies, Statistics Canada, who publishes monthly data with respect to investments, capital investments, and as well as investment intentions, and it's something that we pay very close attention to. And I presume our colleagues in the Department of Finance do the same.
Right. And so just back to so if the budget hadn't occurred, a lot of this activity was going to happen, I think, is largely like that. I don't think anyone would quibble with that amount or that assumption. It's also over a 5-year period. Like, that's also correct, right? This is not in next year. This is something that's going to happen over the 5 years. Do you have a breakdown of when most of that investment is supposed to come? Is that, I think I see it in your report, but is a lot of it seems to be, or is it just basically spread evenly over the 5 years? Is that the assumption that you've made?
That's correct.
Okay.
Yeah, consistent with historical trends.
Right.
And again, just historical trends reflecting reality of, it would be very challenging to drop an additional new $1 trillion in capital investment in a $3 trillion economy and find the people that could actually work on the projects to build the roads and the ports. And
which brings me to my final question, and I was over last time, so I'll try to run sooner this time. What's the biggest impediment that you see in order to achieving the investment here? Is it a people one of some sort? Or, you know, there's going to be a limiting factor in order to achieve this?
In terms of this specific initiative, we haven't looked at that in detail. More broadly, something we have highlighted in terms of risks regarding our economic outlook, obviously, is the heightened uncertainty. And with any capital investment, it's not the federal government that's going to do everything. The federal government is working hand in hand with businesses and provincial governments, municipal governments, and other partners. And to the extent to which there ends up being uncertainty regarding the future of the Canadian economy, and in the case of firms in particular, the potential profitability of long-term investments, because of course if you're making an investment you're expecting to get a return over 5, 10, 15, 20 years, that uncertainty will potentially undermine people's willingness to make those, spend the additional money.
Thank you very much.
Thank you, Mr. Chair.
Mr. Osborne, please, for 5 minutes.
Thank you. I just want to go to Kevin Page, the former parliamentary budget officer, who said he supported the budget's focus on economic growth. Would you say that that's a fair statement?
I didn't see the analysis that underpinned that comment. So I'm not in a position. There are many pundits who pass commentary, and I'm not in a position to follow all of their punditry. And until I have time to sit down and actually analyze the analysis that actually supports their commentary, I'm certainly not in a position to pass comment on it. I'll stick to remembering my own words rather than paying attention to those of other people.
Well, Kevin Page, who I feel was probably well respected as a parliamentary budget officer, also said we need to reallocate funds from current spending to new priorities. And I believe budget did that with the Major Projects Office, Build Canada Homes, the list goes on and on. I don't have enough time here in the 4 or 5 minutes to list all of those things. But in your analysis, the former Mr. Chambers had said if budget had not have happened, what would the investment be? So have you taken into account the fact that there is in fact greater than identified, I believe by you, investment in new initiatives, because there was investment in old initiatives that outlived their usefulness in areas where they weren't meeting targets, in areas where we needed a shift in focus based on the geopolitical world. Is that a fair statement?
It's not, from my perspective, it's not within the ambit of our organization, the legislative ambit, to pass commentary on the policy probity of the government's decision to cut $60 billion from the operating budget and lay off 40,000 public servants over the next 5 years. I would say with respect to the $1 trillion, and as you mentioned earlier, a substantial, close to 85% of that funding, the federal funding, was earmarked prior to the announcement of the budget. So obviously there was an incremental amount based upon our calculations. The vast majority was already set aside beforehand.
So in talking, you mentioned about the size of the public service. The size of the public service increased by 40% over the last decade. Do you believe that was sustainable, or has government do we need to focus on a sustainable size in the public service?
So I have not seen, unlike the definition of sustainability, fiscal sustainability used by the government previously, which clearly linked it to a declining debt to GDP ratio, I am unaware of a definition presented by the Government of Canada regarding a sustainable public service and an appropriate size of the public service. If such a number exists or such an analysis exists, then obviously our office would be very happy to receive it and analyze it.
Have you cut any of the staff in your office?
We have. So we are the only agent of Parliament to voluntarily implement a 5% cut without being requested. We were exempted from the exercise. And a good part of that 5% cut included cutting the salary for the parliamentary budget officer by more than $50,000. I hoped it would set an example for other senior executives across the government. I guess we'll see.
So, based on the geopolitical changes that we see, obviously things could not continue the way they were And I think, if you look at Kevin Page, if you look at other pundits, you said you haven't read their comments, fair enough. But they give praise to the direction this budget has gone in based on the reality of the world we're living in. We need to diversify trade as one example. So, obviously there's a focus there. Would you feel, as Parliamentary Budget Officer, that the need to diversify our options is a realistic focus?
I would say...
Sorry, just a brief answer, if you can.
As a financial analyst, I would say diversification is always a benefit.
Briefer than I was expecting. Madame Gaudreau, please, for 2.5.
J'ai mis mon...
I put my timer on this time. I'd like to come back to something. How the mechanics were done in terms of performance measurements. What I understood is that what was used were the previous mechanisms to give us a perspective on return on investment. But that doesn't work for me. We're hearing the government say, and even in Davos, saying that the world is changing. But if the world's changing, there will also be changes in terms of sustainability, diversity, economy, and results as well. But here we're not talking about cautious. We're talking about, they're saying at the trillion, you're going to see will be a strong Canada, but in a context of change and a fragility. Is that just a slogan, or can we be reassured that the figures here will lead to concrete benefits for the Canadian economy? I think I'm going to come back to an expression that you used, first of all. We're not talking about return on investment here. We're really talking about all of the economic activity, and we use that ratio to make our estimates. So it's not a return on investment that we're talking about. Now, the other thing that we did is, so yes, we have this $1 trillion figure that was announced. Now, there might be a certain amount of confusion because the public might think that we're talking about a net trillion, but 940 billion are already in the economy. So we're talking about an incremental difference. Okay, well, that's an important thing to point out because the businesses are saying, all right, how can I contribute? But this doesn't work.
Concrète. Donc,
we're facing several difficulties. So now that's more clarity. Thank you. Thank you, Mr. Chair.
Mrs. Jansen, please, for 5.
Okay, so Canadians were told that Budget 2025 would create $1 trillion in investments, presented as a big new plan from a new Liberal government. Now, when I look at the details in your report, there seems to be a little evidence of smoke and mirrors in that. According to your analysis, only $41 billion is actually new in Budget 2025, and the rest is re-announcements from the Trudeau government plans. So that doesn't reflect much of a new direction. In fact, it seems to kind of reflect an old announcement just being repackaged. Am I understanding that correctly?
I think, as we said in the report, it's really $41.3 billion that are tied to new measures introduced in Budget 2025, and the remaining is really from previous measures.
Okay, so your report shows that most of that $1 trillion does not come from Ottawa. It depends on provinces, municipalities, and anticipated private investment. So money that is not guaranteed and in many cases not even committed. So in other words, this figure relies heavily on other governments and private investors stepping in. So what's your estimate of how much of that $1 trillion will actually materialize?
We don't have an estimate at the moment, but we are, as Mr. Jake said, following very closely the developments and releases from Statistics Canada in terms of how much more investments we are seeing coming in, and we will adjust accordingly and be able to present a clearer estimate at that time.
So no estimate that we could kind of look at all, not even like a, I don't know, sticky note figure.
Not at the moment.
Okay, so I understand industrial development programs that the government assumed for every $1 they put in, they would attract $8 from others. But based on past experience, your office found it would be closer to 4. Is that correct?
That's correct.
So from my perspective, there's a pretty big gap there on how this budget is being communicated and what we will realistically delivered.
I mean, the difference between this program and the other programs is that it incorporates I guess the new component is that these are measures that have not been put in place before, and since we're relying on past data, it is possible, as we say in our report, that maybe that what we call the implied cost-sharing ratio could be different from what has been the case in the past. And
is there something out there to make you believe it would be different from the past?
just the fact that it incorporates some programs that did not exist previously. So I guess that's just an uncertainty that we would like to flag.
Okay, so the government also announced targets for internal savings and staffing reductions, right, including cuts to executive positions. And so can you tell us how that's going? Do you know kind of what's going on?
We published this morning an analysis kind of, providing parliamentarians with an update on the information we've received regarding the CER, and most specifically on executive. That was not necessarily, we're still analyzing what we got, but we didn't receive additional detail about the impact of specifically on executives. Okay,
so do I understand? Obviously, they said they plan to cut executive positions. I think I heard a number between 600 and 1,000. If it's real, you would think that there'd be kind of information. So based on what you've received from departments, can you show us what the executive reductions by department and the costs and severance packages for those executives would be?
So there's a two-part answer to the question. I hate giving a two-part answer because I like to be succinct. The two-part answer to the question is, based upon the information requests that we have issued to departments under our power of direct access, under the legislative power, we do not have that information. That said, we have been provided the information in our capacity as a federal organization in the context of the Government of Canada's plans to reduce the number of executives across the public service by roughly 12% across departments, and as well additional new guidance that's been issued by the Treasury Board Secretariat regarding the appropriate levels of responsibility for executives.
I wonder, I think I'm running out of time.
Yeah, you have run out of time. We'll go to Ms. Rochefort, please, for 5 minutes.
Well, Madame Johnson, I'll build a little bit on some of the questions you were asking. So thank you, Mr. President. And so I'd just like to come back on the methodology, if I may. And in your report, you described that you assessed the government's implied cost-sharing assumptions using historical program data, conducted sensitivity analysis on the estimated $1 trillion in total investment activity presented in the budget 2025. And then that resulted in applying less optimistic assumptions for cost-sharing ratios in certain program areas. And we just mentioned the Industrial Development Program and the implied cost-sharing ratio of 8. Then you, in one of your footnotes, you explain that Finance Canada, their investment estimates are based on model-generated results rather than an assumed cost-sharing ratio. So to me, it seemed like there was a difference in methodology, and I want to understand that methodology. What is the difference between a model-generated results and assumed cost-sharing ratio results?
I guess for the note you're mentioning only refers to one program, not all of the program areas. And I would say the main difference, if any, it's really modeling relies heavily on historical programming. So I would say it's more a complementary relationship than a difference, really, because when you're modeling something, you do rely on historical data. And depending on the nature of what you're trying to model, if it incorporates a component that you have never experienced before, then you will come up with your own assumptions of what the future will be. So I would say it's more of a complementary relationship.
That is correct. Can you hear me okay? Yeah, that is correct. And that is why it explains the major gap in your estimates versus those of the government. And we all prefer to have historical data, or proof in the pudding, as I always put it, for sure, because it makes the estimates or the forecasts more accurate, correct? But to me, I was just wondering how you feel, and I know maybe it's not the right word, feel, but as you see some of these announcements in recent weeks, and I look at the MOU of Alberta, where it's acknowledged that the industrial carbon pricing may drive over $57 billion of investment, enabling carbon capture projects like Pathways, or the automotive strategy. Yesterday, our Minister Joly spoke of the many conversations she's been having with industry across the world, and as we develop our automotive strategy for Canada and for the battery sector. And then, of course, the $70 billion of investments from the United Arab Emirates. Sorry, yes, I got estimates on my mind, sorry. And then certainly we look at the trade agreements. Last year we signed 3 trade agreements, and I was interested when the minister spoke out and said that historically we signed 1 agreement per year. And now we have signed 3 last year, and there's other trade negotiations that are underway with major economies like India. And then I really enjoyed an article this week by Premier Eby in British Columbia, where it said he's basking in mining expansions, which is speaking to the confidence that is, currently present in our country and around the world with Canada. And so my question ultimately to you is, could there be, as you listen to these various announcements, do you feel that maybe there is some value to the model-generated results of the government?
I think the short answer, sorry to cut you off.
Is yes?
The short answer is yes.
Thank
we
you.
have the utmost respect in the high-quality work undertaken by officials within the Department of Finance. I would also say that having paid attention to the technical work published by external forecasters, regarding the $1 trillion investment announcement, there did seem to be confusion among the public and among forecasters what precisely that $1 trillion figure meant. And the mandate of the Parliamentary Budget Office is to promote transparency and to ensure people have a good understanding of what the numbers mean.
30 seconds.
I'm good with that answer.
Okay. Mrs. Block?
Thank you, Chair. I want to circle back to the $285 billion the government is spending, which is noted in your office's recent report on federal spending. And they're doing this to support, as we've been talking about, $1 trillion in total investment. And I want to talk about how it's calculated based on their definition, not yours. And my question around that would be, what would your office consider to be a more accurate number? And given that there are these different definitions, can these present challenges for parliamentarians when evaluating the government spending, especially if it's misallocated?
That is a multi-part question. So with respect to the $1 trillion, based upon the historical data and the historical relationships that we've looked at, our estimate is that it would be a lower figure in comparison to the figure presented by the government. With respect to the capital component of the $285 billion, whether it's the government's new capital definition or the alternate capital definition that we would use, it's still $285 billion. So $285 billion of federal efforts and federal supports to stimulate capital investment and capital formation across the economy. I do think, and touching on your third point, I do think it does highlight the need for clarity around language and especially around capital, and potentially, again, going back to the comments from the recommendations from the International Monetary Fund regarding the broad definition that the government has chosen around their new definition of capital, it does make it, there's an additional layer of complexity that potentially makes it that much more challenging for everyone to fully understand and appreciate what's going on.
Thank you. In the report that you released today, you provided an update on the government's comprehensive expenditure review. And in that update, you noted several organizations still need to have their plans finalized and reviewed. How important is the execution of the expenditure review, and how directly tied is this policy to the government's promise of reducing the deficit to GDP ratio as a fiscal anchor?
Oh, it's intrinsically linked, and that's why we examined the issue. Because, again, in comparison to previous recent exercises, this is fiscally material. So to the extent to which the government is unable to execute or the putative savings aren't actually realized, it will have a direct impact on the government's ability to respect its fiscal anchors.
Thank you. As we've been noting again around the table, the IMF released a report last week that encouraged transparency as part of this review. Would you be willing to provide the committee with, say, quarterly updates, or Chair, I guess I should ask if we, the committee, could ask the Parliamentary Budget Officer to provide us with quarterly updates on the government's progress and execution on their savings plans.
Is that doable from your office?
Yes.
Intent just to public or to provide it to us?
Yes, on a quarterly basis.
Are we fine? Perfect.
Okay.
So done. Thanks. Thanks, Mr. Jakes.
Thank you. Do I have
1 minute.
1 minute? Okay. Your report finds under information received that nearly all organizations that provided you with service level impact assessments, they said there will be minimal or no impact on service levels. And I find this interesting based on some of the conversation we've already had in regards to the cuts to the public service. If cutting these positions won't affect service standards, it begs the question, why did they exist in the first place? And why are the taxpayers on the hook for these positions if it's not going to make a difference whether they are here today and gone tomorrow? Can you comment on that?
I think it's well outside of the mandate of even the interim parliamentary budget officer to comment on that. I think there are many deputy ministers who'd be better placed than myself to respond to your question.
Thank you.
Thanks. Ms. Khalid, please, for 5.
Much, Mr. Chair, and through you, welcome to our guests here today. And Mr. Jakes, thank you for your analysis and for your contributions. I'll start by asking about one of your recommendations, that the government establish an independent expert body to determine which federal spending categories and measures qualify as capital investment under an expanded definition beyond the Public Accounts of Canada. You had previously, just now, spoken about efficiency and cutting costs within your own office. So can you talk about what the cost of this recommendation, if implemented, would be, and what would be its impact?
I think looking at the recommendations and the observations from the International Monetary Fund, it would certainly be worthwhile, and it would make sense to have a separation of the definitions of what is capital from the people who are actually measuring it. It's good basic practice, a separation of responsibilities. In terms of who does it, I think there's always opportunities for productivity improvements across government, and consistent with the experience in our office where we weren't asked, we were actually told we were excluded from the restraint exercise. Day one, I sat down with the chief financial officer and proactively asked for a plan to reduce our spending by 5% without anybody asking for it because it was the right thing to do. And we continue to increase the output of the office. So in the fall, our output was actually up by 15% in comparison to the previous year, even with a spending reduction. So I would think that there are substantial opportunities for productivity improvements where a mandate such as the one that you mentioned could be undertaken by somebody potentially without additional resources.
So is that a mandate that, like, for example, in your office, that would be something that you would be able to give your a little bit of your budget towards, or like how do we pay for something like this is what I'm asking.
I guess the question is, what is this? So in terms of the proposal, what is the precise proposal? Something I've learned, again, having been with the Parliamentary Budget Office since it was initiated 18 years ago, the first step, as soon as a parliamentarian has a proposal, is to sit down with the detailed terms of reference. That's between 300 and 500 words, because to make sure that everybody's on the same page with respect to what the proposal actually looks like. And so before I commented on the cost of fulfilling or making an administrative change in our office or creating a new capacity, I would want to sit down and actually look at what the proposal is.
Interesting. I appreciate that. So, I mean, we've been talking a lot about investment versus impact. As what we've talked about in the recommendations that you've provided in your report, also with what is Budget 2025. So when we talk about, government is not in the business of making money, right? And we're talking about cuts. We're talking about finding efficiencies and trying to make sure that we are using taxpayer dollars in the most efficient way. There are a number of programs within the budget that we're trying to invest in. And I'm hoping that what I really want to know is, how do you do that calculation of investment versus the impact of the dollars that are invested? So, for example, one of the line items in the budget was investing in accreditation program for newcomers, new professionals that are coming into the country, to make sure that they get accredited in an efficient way. So when we talk about the dollar number that is invested in that program versus the impact and future, I guess, return on the investment, how do you calculate that in your office?
So it ends up being a multi-step approach. So once the budget is tabled, and generally speaking, we receive a detailed spreadsheet from the Department of Finance that actually identifies, of the total spending announcements, what falls into which categories. So in terms of operating transfers, the transfers that are being made from the federal government, who is going to be receiving those transfers. And then we map it into the economic system and national accounts to get a sense of where the money is going to be flowing across the economy. Where there are structural changes, such as the one that you identified, where there might be changes to accreditation, or, as mentioned earlier, the Major Projects Office, we try to identify examples of where there have been similar changes in the past to see where the basic numbers won't necessarily tell the whole story. So where there is a contemplated structural change in how the economy operates, simply dropping an additional dollar into the economy and having an output of, or an estimate of how much will actually be generated in terms of GDP won't necessarily tell the whole story if the machine regarding how the economy works is going to be different after the fact. So that's the second step. The third step is very much stress testing. So after we have, as part of the third step, we start to actually look at the overall numbers. So what's actually rolling out and how it actually appears to be impacting the economy. And we've done quite a bit of work recently regarding the government's changes over the past few years on the immigration side. So that's been particularly important because, of course, demographics and the working age population, it's a key part of economic growth. People are the economy.
I have to cut you off there. We're past our time. Ms. Gaudreau, please, for 2.5.
2,5? OK.
2.5? Okay.
Je vais vous laisser l'opportunité de vous
I would like to hear.
Le gouvernement a donné.
You said that the government provided a definition that was too broad in a definition of capital spending too broad. I would like people listening to us to be able to understand that. Could you explain it more?
Dit ça à cause du...
We said that because of the approach used by other countries when they define what capital spending is. And also, the Government of Canada specifically decided to identify a basket of capital spending. But there is another definition used by Statistics Canada and other countries as well. So for us, there are problems with that. So first of all, there's a bit of complexity and confusion. And we've seen this with this $1 trillion figure. And another concern is the connection between the government-supported spending and the formation of capital in the economy in general. So the connection is not clear and strong. We believe that it would be better to use a definition that was already established by the Government of Canada, Statistics Canada, and that one that's used by other countries, where there's a strong and clear link that's well established.
Ça fait pas le bonheur de tout le monde, mais...
Well, not everybody likes change. And sometimes you need to change, but when there is a change, we have to know what the new rules are, or what our new glasses are that we're supposed to wear. Now, if I understand, and you will correct me if I'm wrong, but in the past, was all that clear compared to what we have today? It's very unclear. All the answers that we're getting are very unclear. It's like a smoke show. But at the same time,
ne sont pas
the rules, and sorry, I don't mean the rules. I'm a little. That's not what I want to say. But even the data and the information, understanding the mechanism, all of that, none of that is clear. So what do we do with this?
Le gouvernement de Canada est toujours prêt.
I think that the Government of Canada is always willing to receive your recommendations, because all public servants are, in theory, supposed to include transparency, or increase transparency, rather. Sorry.
Perfect.
Sorry, when there's noise, I get a little unfocused.
Thank you very much, Mr. Chair, and thank you to the PBO and the staff for coming here today. Appreciate it. Well, one of the hallmark, I would say, policies of the 10 years of the Justin Trudeau government was the implementation of their GBA Plus strategy, which was driven in large part also by the hiring practices of the government. But when we look at the CERs and we see all of the reductions in full-time equivalents, is the government using a GBA Plus in those reductions as well too?
We did not ask for details around the GBA Plus analysis around the reductions. That's a question that's better put to the Department of Finance regarding what the application of their GBA Plus lens.
Okay, but so nowhere in any of the information that you looked at was there any indication that they were using that then?
I would say we didn't request that data. So our efforts, again, are really very much focused on the fiscal side, fiscal anchors, the government's ability to actually respect the fiscal framework that it itself has established, and looking at whether they're on track to potentially save or reduce spending by that $60 billion over the next 5 years, which is directly linked to its ability to respect its declining deficit to GDP anchor.
Right. I would think if they took it that seriously that they would have probably just given it anyway, or would have been included in the numbers and the reporting. That would have been, should have been so obvious, I would assume. But anyways, on to my next questions I have for you. I think when we had the Treasury Board here, there was an issue with you trying to get some information from the Treasury Board because they said it was sensitive in nature. It is people's lives that we were dealing with. Are you dealing with any other departments who are withholding information, or maybe are taking longer than they are supposed to or should otherwise in order to give you the information that you require?
I think in the case of sort of the second round of information requests we sent, so in kind of the first batch we only sent 5, and then following the results that we got, we then proceeded to send it to all 83 organizations that were mentioned in Annex 3 of Budget 2025, so would be affected by the CER. And kind of the result that we got from that is that all 83 responded to us. There was a handful in there that did not provide the data, but mentioned that the reason for that was that their plan were still waiting for approval and to be finalized. Otherwise, I think that the majority provided the data that we asked for. There was another subset that did not provide some of the data, either kind of FTE reduction or service level impact. And in the publication that we posted on our website this morning, we have sort of a breakdown and a list of those organizations. There's also a smaller subset that did not disclose any new information to us. So sort of I think in general, there was sort of a wide range in the level of detail that we received from those organizations.
Was there a specific timeline that you guys had expressed to the departments for getting that information back to you?
Yeah, so the organizations had 2 weeks to respond to us, and we received responses from all of them. It was really sort of in like what was provided in those responses that varied across departments.
Okay, and for Canadians who are watching this, can you explain just how difficult it makes it for you guys to do your job when you don't get fulsome information from departments, or you get partial information, or you get this department gives you the full gambit of information, but this department only gives you a little bit of this, and then this department gives you nothing? Like, how hard does it make it for you to actually do your job as the PBO when you don't get consistent access to information from departments?
I think it's definitely challenging when we have issues with access to data. I think in the field that we are, more data is always better. And I think right now we're, having some effort to kind of go through everything that we received and trying to make the best of it and use it to, inform our future fiscal outlooks the best that we can.
Just to add, I would also say that there are several responses that we received, more than several, that we received that are non-confidential. So the information is provided to us. It's not public, it's not on the website, but it's not confidential in nature. And I would say it would save everybody a lot of time and effort if the government adopted an open by default approach. So rather than us having to...
Can I interrupt, Mr. Jakes? Is this the same issue we ran into with the request for the first 5? Before Christmas, that we had to pass a motion?
It's a little bit different. For the request for the first 5, as my colleague mentioned, that would apply to 3 departments. So the Canada Revenue Agency, Library and Archives, and Parks Canada, who...
Right, but this is the same information you're looking for.
It's the same, exactly the same information.
Okay. So I noticed there are the 3 that refuse to disclose anything, and the rest are in progress. Is it fair that we do a similar motion to those 3 and then follow up on the in progress in a month, a couple weeks from now? Because the majority have, but there's the 3 we're back to who are like the original 5 who haven't disclosed. Is that correct?
That's correct.
Is that fair that we'll ask similar to what we did in December for those 3 to disclose? And we'll follow up maybe 2 weeks in a month for the in-progress ones. Okay. Would that be suitable for 1 month, say, for the in-progress ones?
I don't think I understand what the ask is here.
Well, just briefly, we ran into this, and correct me if I'm wrong, Mr. Jakes, we ran into this in December when you asked for information and departments refused, but this committee passed a motion saying, hand the confidential information over, not to be shared with us, but for you to do your work. Committee passed it, you received the information, You've since then asked for the rest of the information in the CER that the Treasury Board President promised, but 3 have refused to pass over. So I'm suggesting we just apply the similar request from this committee that they provided in confidence to the PBO for the CER analysis.
Sorry, Chair, I don't understand. So when we say that the departments have refused to hand over the information, what exactly does that mean? Through you, Chair.
Yeah, if you can explain.
Yes. Yeah, so we, of the 83 responses that we've got, we've kind of categorized them in different categories. And so organization that provided the data that we needed to do our work were listed as all disclosed. Some that gave partial information based on what we asked, we tagged as disclosed in part. So in the case for those organizations is that they either did not provide details about FTE reductions or service level impacts. And then kind of the third category is organizations that you listed that did not disclose any information beyond what was available in Budget 2025.
Chair, can I, as a follow-up, so my understanding is that all the information was provided by all departments, and again, I go back to that word, like refused to provide information. What does...
Refuse or didn't.
I mean, there's a big difference between refusing to or...
Oh, it's semantics, didn't.
But major difference. But also, I'm wondering which departments are we specifically talking about? What specific information are we talking about? I'm not sure what exactly the ask is here, and I'm not sure what.
I'll repeat it again slowly. There's 3 departments: CRA.
For repeating it slowly. I
Parks
appreciate that.
Canada. I didn't mean it like that. CRA, Parks Canada, Library and Archives Canada. This is the same information that the PBO had asked for those 5 original departments in December that would not turn over the information. The committee passed a motion asking those departments to turn it over to the PBO, not to us, not to make it public, but to turn it over to PBO so they could do their analysis. They've now written to the other departments, 75 some odd had disclosed the information. Some have said, we're just in progress, we have to get a bit more. 3 haven't disclosed. And so I'm asking that we do the same for these 3, that we did the same for the other 5, and direct them to turn over the information.
May I, Mr. Chair? When I read the footnotes, it seems to me there was a footnote related to the fact that there was a few departments that had not provided all the information because their implementation plan for workforce implications had not been completed. So it might be good to go back to see.
Those are the ones I think, as described, are in progress. I'm referring specifically to the 3 who have disclosed nothing.
So I believe they have disclosed, and my understanding is they've all disclosed, but there was a footnote which might be important to go back to take a look at what it said specifically. Okay, I hear you.
The 3 that did not disclose, maybe you could clear up their response.
Yes, certainly. So, in the footnote, we do mention that and list organizations that for which the information request is still in progress for different reasons. But those that provided response and kind of a complete, so
disclose.
Canada Revenue Agency, Parks Canada, and Library and Archives Canada did not disclose information to us.
Right, at all.
Nothing beyond what was publicly available in the budget.
Right. So those are the ones that we're referring to.
But they replied. Is the point. They replied.
No,
she just shook her head. Yes, they replied.
Okay.
Yeah.
Why don't you clear it up for you? Did they reply with the information that the PBO needs to perform its analysis?
Oh, they did not have the information is what they were saying. So I think...
Could you clear up for those 3?
Yeah, so they sent a response that did not contain any information beyond what was already publicly available.
Okay.
And they explained why.
Get back to you? Sorry.
Yeah, I'm sorry.
So go ahead, Ms. Rushford.
No, I'm so sorry, Mr. Chair. Just because I read the footnote, that's all. I just want to make sure.
Rappel au règlement.
Call to order. Listen, my brain has limits. Interpreters are doing a great job, but I missed the last few minutes. I'm just trying to understand what's going on here.
Des éléments.
So we're missing information. We want to present a motion. so that the PBO can obtain that information. So from 3 departments, the CRA, Archives Canada, and Parks? Yes? Okay. All right. So please slow down.
Please.
Pardon, moi, la seule chose que je dis, c'est quand j'ai lu le rapport, il y avait une...
The only thing is that I'm saying is that when I read the report, there was a note explaining that all departments had responded and that it was well noted. So I find it important that we should go back to that note to understand before we present a motion. I don't have the report in front of me, though.
Quickly then, what they responded was, we're not handing over the information that you've requested, or we're not providing the information you requested. The other departments did, but they didn't, yeah, sorry, and the question is, did they provide a justification for not turning it over?
It was the same explanation that we received previously by the 5 departments, that there was confidentiality of a sensitive nature owing to human resource sensitivities.
Right.
And as a result of that, they declined to share the information with us. As noted previously, we disagree with that being a legal basis for refusing to respect the Parliament of Canada Act and the power of direct request by the Parliamentary Budget Office. Based upon the response from the 5 departments, initial 5 departments, and the other departments that have shared all the information with us, I think that it's a very flimsy excuse at this point.
My only point is the report did not say that. And so it's important, if they did provide, to me, if they did provide a response and an answer, we should see what it is before.
You were just provided it.
Well, I know, but it's not what it said in the report, written report. That's different from what I recall. Anyway, I think it's important to see what that note is, just to understand.
Yeah, agree with...
Okay, I am sensing that the Liberals will not
No,
the government side would not allow us to move forward as we have in the past. So I'm going to leave it there, and perhaps it's something that someone can bring. Let me finish, please.
Yes, of course.
That someone can bring up as a motion on notice, perhaps written as we did in December, to have the information release. And I regret breaking up our we're go ahead quickly, and then we'll go back to our rounds.
Yeah, absolutely, Chair. So, sorry, Chair, I don't mean to contradict you. However, we're not saying that, no, we can't have access to this. We're not saying that, no, we cannot ask for this information. I'm just trying to seek clarity as to what exactly it is that we're looking for. And so I appreciate that.
We've gone over it many
100%.
times. I've provided clarity. Mr.
Chair,
Jakes has provided clarity. Ms.
Chair,
Nicol
you don't
has
like it when I
provided-
talk over you. I'd
provided
appreciate if you
clarity.
could give me the same courtesy.
Okay. We've put it to rest. There's no consent, so therefore
Yes.
the issue is put to rest.
Okay.
We'll continue with our with our time.
Do I still have time, or are we on to the next questioner?
With Mr. Gasparo's 5 minutes.
Thank you. Coming back to the macro strength of the Canadian economy, when I had my line of questioning, I touched on the IMF's 2025 Article 4 report that said our economy is weathering external trade shocks better than expected thanks to policy responses and strong fundamentals. In addition, on January 1st, Reuters published an article, and the main point from the article said the Toronto Stock Exchange's nearly 29% surge this year also positions the index for its strongest annual performance since 2009, outpacing the S&P 500 in the U.S. Again, January 27th, Reuters, Canada's dominant market for initial public offerings is poised for revival in 2026, signaling renewed economic confidence and validating the government's pro-business agenda. Obviously, as you well know, our pension funds, Canadians' RSPs, RESPs, TFSAs are obviously are directly correlated to the strength of our capital markets. So what I'd like to ask you is, from the Reuters article, speculated that Canadian IPOs are poised for revival in 2026. Peter Miller, head of equity capital markets at BMO, stated that, quote, the IPO pipeline is the strongest I've seen since 2021. What impact, my question for you is, what impact can a strong IPO market have on domestic investment and foreign direct investment?
To the extent that it's stronger than we would have otherwise anticipated, and there's additional flows of capital going into Canadian businesses, obviously if it gets additional investment in the Canadian economy, allowing greater capital formation, greater hiring, and overall improvements in productivity and growth.
And eventually lower debt to GDP ratios, or improved debt to GDP ratios, et cetera. Okay, thank you for that. Our government removed all federal interprovincial tariffs in Bill C-5. What impact would fully removing all interprovincial trade barriers have on Canadian investment?
I'm familiar with the range of figures that have been published by other reputable academics. We're looking at a couple of percentage points of GDP, which is substantial. So we're looking at a substantial increase in the overall size of the Canadian economy, and improvements in the standard of living for all Canadians, were that to come to pass.
So, and thank you for all that. And I asked those questions in the order I did because when you are running assumptions, and the assumptions you are making in your analysis obviously has a great deal of impact on the final output. It's just what's coming in will impact what's coming out. Did you test scenarios and do some stress testing of different inputs to drive to some of the decisions that you made? So, you know, did you take a more conservative view? Obviously, small c conservative. I did that for you, Chair. Yeah, I know you are. And maybe more liberal inputs to come out with different scenarios when coming to small L. That's right, small L. Anyways, you know where I'm going with the question.
So the short answer is yes. We always run scenarios and stress test all of our economic and fiscal outlooks. And I would say that if we actually paid performance bonuses in the office, the people that run the macro forecast would receive a substantial bonus this year because the numbers that we published in September, broadly speaking, have come to pass. And with the International Monetary Fund's macro forecast that they published on January 21st, rather, it's broadly consistent with what we had previously. It is, to your point, structural reforms are very difficult to forecast. There's a lot of uncertainty, and what has happened in one jurisdiction won't necessarily happen in another jurisdiction, especially one like Canada, where you have the federal government and 10 provinces. That said, it doesn't mean they're not worthwhile. It certainly does not mean that they are not real. And it's something that we're paying very close attention to. And I, like everybody else, would love to see higher investment numbers and outturn numbers coming in from Statistics Canada. And as soon as that happens, we will be one of the first organizations to start to build that into our scenario analysis as part of our economic and fiscal outlook. I would say the Government of Canada, as part of Budget 2025, they also took a parsimonious approach. So there were the additional announcements as part of the expectation of a boost in investment spending, but they were very clear that they didn't incorporate that into their forecast. It doesn't mean it's not going to happen. It's simply a prudent approach in budgeting.
Thanks very much. Mrs. Jansen.
We're just going to split our time here because my colleague and I were chatting. We were both, probably others, were shocked to hear that you don't have the info on the cuts to executives. And so we were kind of wondering, it's such a critical issue, whether it might be possible to move a motion to call the TSB to get some more answers, to come to committee and help us understand what's the plan.
Treasury Board, Do you mean the president
yeah.
or the deputy minister, or
We need answers. Who's going to give us the answers?
we agreed to invite him for 1 hour? Deputy minister and the president? Sure, we'll follow up with that.
Okay, okay, thanks. Over to you.
Okay, thank you. Thank you.
And a concern.
So, Mr. Jakes, in Chapter 5 of Budget 2025, the government outlined another initiative going forward to find savings, and this was called Optimizing Productivity in Government. And the claim that they are making is that it will save an additional $7.75 billion over 3 years, starting in 2027, and then another $3.25 billion ongoing. In your report on the CER, departments indicated there would be limited to no service level impacts, as I mentioned before. But I'm wondering if in this initiative, is there an indication that there could be service impacts?
For that initiative, we have not put the question to departments. We will need to do so at some point to assess the reasonableness of the savings estimates that are in the budget, which again are linked to the government's ability to manage the fiscal framework and respect its fiscal anchors. We're not there yet. We're still digesting the very many requests that we sent out and the substantial amount of information that we have been provided.
So would it be fair to say that this could lead to more FTE cuts beyond what has been advertised by the government?
It would be speculative at this point. And I'm not the interim parliamentary speculation officer.
Okay.
I'll leave it to the pundits.
There we go. There we go. Yes, because that's what they do best. So looking at, again, the report today regarding planned reductions, and just in light of the conversation we just had in potentially asking departments to provide the Parliamentary Budget Office with the information needed in order for you to do your work. I am wondering, Chair, as members having to scrutinize the savings plans of the government and the announcements that they are making regarding those savings, could we ask the Parliamentary Budget Officer to publish in a report for the committee all information deemed non-confidential in our efforts to scrutinize their savings plans?
I guess it would be atypical if it's non-confidential, but is that something you can just put together and save time with an ATIP?
If there's a motion, we work for you. So if there's a motion from the committee,
clearly stuff that's been identified
as
to the PBO as non-confidential
by the departments.
Yes.
Yeah.
As
So
non-confidential.
we could
So the
provide,
departments, so the departments are making that decision, not you.
correct.
Yes.
I would correct as long as departments have identified it as being non-confidential. If we're holding it in order to do our work on behalf of parliamentarians. Then with a motion from the committee, we could certainly furnish that information to the committee.
You're fine with that? Purely the items is identified by the departments, not us or others, as non-confidential. Sure. Thanks.
Okay. Do I have any? I have
10
a minute.
seconds.
You know, I don't know. Mr. Patzer, your time ran out due to the debate that we were having.
Yeah.
I'm wondering if you would like to follow up with a question or two.
Yeah, I do actually have another question that I was hoping to get to there earlier, and that's around the issue. Your report didn't get a chance, I think, to fully get into the issue of crowding out investment with the government's obviously trying to invest. They're saying it's going to catalyze this $1 trillion, but is there a risk that with the federal government is spending too much money that it's actually going to crowd out private sector investment or disincentivize private companies from investing their own money if they're just simply waiting for the government to give them money in order to invest?
It is a possibility, indeed.
Have you seen any issues of that maybe not so much even in this study, but in other studies that you have done, have you actually encountered that before? Have you seen signs of that being an issue?
I mean, I think it's a recurring theme. Usually when the federal government invests, there's what is perceived to be an optimal level of investment in order to make sure that all investments are productive, and just what the literature suggests, but nothing new specific to this case.
Good. Thanks, Mr. Osborne.
Oh, thank you. I just want to go back to the cost-sharing assumptions for a moment. And my colleague, Mr. Gasparo, went down an avenue that I wanted to go down, and that is the elimination of interprovincial trade barriers, the movement of labor, the ability to business, and so on. I think that fundamentally changes the historical measurement on cost sharing because there's greater competition. There are companies in my province, for example, Newfoundland and Labrador, that would not have been able to bid in Quebec or Ontario prior to this. So that will make a change. The geopolitical landscape has changed, which may also make a change. The significant increase in national defense and the national defense infrastructure program should make changes. So you mentioned earlier a couple of things I just want to bring up. You talked about the Department of Finance, a prudent approach to budgeting. And I would agree. And just for those people with nothing else to do in their lives that are watching this program live, I spent a number of years as finance minister in Newfoundland and Labrador. Politicians provide the policy. We don't provide the analytics that are in the budget. So the assumptions that are in the budget would be done by the bureaucrats. You mentioned that you had great faith in the bureaucrats in the Department of Finance, the officials, and I'm paraphrasing, but you did say that assumptions are hard to measure based on the machine that drives the economy. So the difference in your cost-sharing assumptions and those that were done by officials in the Department of Finance, how can you be so sure based on things like interprovincial trade barriers coming down? Is it fair to say that historical measurement of those cost share are not necessarily the indicators we should follow? Because there's a marked difference in what you're putting in and what officials put in. And, you know, I think it's fair to call that out.
Sure. So, yes. And I would also say that we use historical data to forecast the future, not because history is going to repeat itself, but because it's the most defensible and impartial way of doing it, rather than exercising our own professional judgment absent historical data. And let me be one of the first people to say that I, again, would be, like many Canadians, very happy and thankful if we do see an inflection point in investment in the Canadian economy and Canadian workers are better served with more equipment and their productivity in turn increases and productivity across the Canadian economy has a sustained increase. Absolutely.
No, I appreciate that response. You know, I think, you know, if we're looking at the difference in assumptions between your office and, you know, with great respect to your staff as well, and the assumptions made by the department officials, you know, I think it would be unfair to say that one set are absolutely correct and the other set are absolutely incorrect. You know, I would anticipate that, you know, we may see movement based on one set or the other set of numbers. You know, just to draw an example of that, I know Statistics Canada, who I also have great respect for, had indicated that Newfoundland and Labrador's population would decline year over year for 25 years. Well, the last 4 years, we saw an increase in population. So things can change based on, you know, the environment we are in, such as the removal of interprovincial trade barriers. So I would, you know, perhaps think that historical analysis or basing it on historical analysis, maybe things may have changed. Is that fair?
Absolutely. Again, as I mentioned previously, it's very challenging to model structural changes. So when the economy we're dealing with, the economy obviously will change over time. And in a situation where it's not a gradual change, but a sudden change, and thinking most recently of the pandemic, the forecasting models that you would have used based upon historical data, going back to the scenarios that we were publishing in 2020 and 2021, the historical data wasn't quite as representative as it otherwise might have been, which required more judgment on our part. So I always go back to, the governor of the Bank of Canada made the comment that if you're in the forecasting business, I'm paraphrasing, not quoting, but if you're in the forecasting business, you should exercise a lot of humility. And that's something that I keep in mind in the office.
Thank you very much. We're going to go Mr. Gill for one question, and then we're going to deal with I think kind of a programming or a scheduling motion, but go ahead, Mr. Gill.
Thank you, Chair. Through you, Chair, the PBO's report highlights ongoing weaknesses in the private sector investment and the lack of productivity growth. My region of Windsor-Essex is one of Canada's most manufacturing-intensive and trade-exposed regions. What does your analysis suggest about the long-term economic outlook for communities like mine if these trends persist, and what federal policy levers could have the greatest localized impact to change the course from the current trends?
Thank you for the question. So our economic modeling doesn't get down to that level of detail with respect to your community, unfortunately. That said, right now, obviously, the Canadian economy is undergoing a lot of change. And that change is both in terms of individuals and it's in terms of companies. So what you're potentially seeing in Windsor-Essex is kind of a microcosm of what we're seeing across the entire country at this point, where the jobs that people had in the past aren't necessarily going to be the same jobs in the same location that they're going to have in the future. And I would say the plain vanilla approach to dealing with that, and consistent with the policy recommendations highlighted by the International Monetary Fund, is for for a government to be in place to help with that transition. So both in terms of individuals, so we've seen the government come to the table with respect to additional supports through the employment insurance program, additional supports through training to help people find that next job that might be outside of their field, and as well in the case of firms. So owing to the uncertainty, providing additional liquidity, so financial support, as well as other types of supports, recognizing in Budget 2025 the government's objective to further diversifying trade, so a doubling of Canadian exports net the United States, so helping those firms that are producing really high-quality Canadian goods identify those markets, obtain export financing, and have the support they need to actually be able to provide that.
Okay.
Thank you very much.
No easy answers.
Thanks very much. Mr. Jakes and crew. Mr. Malabir, thank you for all your input today. We're going to excuse you, but thank you very much for your time, especially last moment, as always. So we appreciate everything that you've done, and we're going to go over to a bit of committee stuff right now, but rather than bore you with that, I'll thank you and dismiss you. Thanks very much. Colleagues, just a couple things. Although it's just been put on motion, I'm getting a sense from everyone we're fine adopting it. So even though it's not the 48 hours, I get the sense we're all fine with it. Mr. Osborne's, yes, we're going to seek UC to approve it. Basically, Public Works has proactively offered to be here February 12th. Yes. So we'll try and get Canada Post at the same time and leave it with, sorry?
If I could, Mr. Chair?
What's that?
I just want to read the motion in for, I know my mom is tuning in and there may be other people that really want to hear this, but if I could read the motion in, that'd be great.
Well, you can read it in and ask for UC from everyone that we actually vote on it now, because otherwise you can read it in motion on it. We won't be actually properly get to it till we're back in a couple of weeks, but for Tom's mom.
Thank you. Should be very proud of me and thankful for you. So the notice of motion that the committee agreed to a subject matter study of Bill C-15, specifically clauses 195 to 199, Division 2, clauses 203 to 209, Division 5, clauses 210 to 216, Division 6, clauses 217 to 222, Division 7, and clauses 592, Division 40, that we invite the President of Treasury Board for 1 hour, followed by 1 hour with the Red Tape Reduction Office, followed by 1 hour with representatives from the Public Service Alliance of Canada, the Minister of the Government Transformation, Public Works and Procurement for 1 hour, followed by 1 hour with Doug Ediger, Chief Executive Officer of Canada Post, that the committee dedicate one additional meeting to the ethical accountability and transparency implications of Division 5, Part 5 of the bill amendments to the Red Tape Reductions Act, and that it forward any recommendations or suggested amendments to the Finance Committee by Thursday, February 27th, 2026.
Great.
Looking
I hope you realize that does not mean that you don't have to call more often to your mom. So just very quickly, we do have, as mentioned, public PSPC has proactively said they'd like to be here the 12th, so we'll try and get Mr. Edinger the same day. The other days, so we just ask that you leave it to MOG and our analysts to arrange the dates, if that is fine with everyone, and we'll adopt it on UC if we're fine. Perfect. Everyone's got a copy, would have received a copy of the budget. This is for the last Canada Post meeting we had, because we went over our budget for the 3. So can we have, yes, adopt it? So passed. Thank you very much. February 10th. Obviously we're not here this Thursday. February 10th, we've got the rescheduled appearance for Minister of State Fuhr and Mr. Guzman from the DIA. So you're aware, February 10th. We had bumped the Info Commissioner in December. We had booked her, but we had bumped her for, I think it was maybe for to squeeze in Canada Post. So I'm suggesting February 3rd or 5th, depending on when she's available, and working around these other meetings that we bring her in. I had planned on the 3rd or the 5th, depending on the Info Commissioner, to do subcommittee meeting, but if we, with this adopted motion with all these meetings, this will take us to our break week for Family Day, so I suggest we just skip the subcommittee and work around the schedule as for Mr. Osborne's motion, Mr. Guzman, which we have already, and the Info Commissioner, and that will take us to February break. And I don't think there's anything else. Is there, sir? No. Cool. Madam?
Unrelated, but slightly tied to this. I just wanted to thank you both, the chair and the vice chair, for changing the schedule. I much prefer personally, I just want for the record, Tuesday afternoon and Thursday morning. Thank you for that.
I wish it had anything to do with us, but it doesn't. Sorry, one last thing. When we're done here, our clerk has the last unredacted docs. If you saw the notice that came out from industry, we have some new ones. So if you see him individually, the ones that you received here are redacted. They're considered public. The ones that you're going to receive are redacted and are confidential to the, unredacted, are confidential to the MPs only, not for staff, not for whip's office, etc. So please see our wonderful clerk. After that, if there's nothing else, the analyst or MOG will send out the dates as we get them confirmed. And then we also had the other motion for Treasury Board. We'll work around that. I'll leave it with the clerk and our analysts. And we'll see everyone a week today. Thanks very much. We are adjourned.